Hi, let's make a brief study on ICOC. This is the chart since the IPO, which was about 20 years ago in 1988, and the stock didn't go anywhere over these 20 years. But the trend now is bullish. You can see here the stock is above the 50 days and the 200 days moving averages. Over the medium term, we have this ascending channel, and on the short term, we can see the stock just made a bullish breakout to a new 52-week high above 798. It would be bearish if the stock were to go down below 798 again, but I don't think that will happen given the fundamentals. We'll see that next. This breakout was on very high volume here. You can see volume above average lately. So from a technical standpoint, I like ICOC. Let's check the fundamentals. We'll move on to the valuation model so we don't lose much time here. The initial share price is 8.2. Let me see if that's still the case. Doesn't matter much, but where is this? Yes, 8.18 now for ICOC. The initial share count is 26 million shares, and the company has been diluting shareholders' value at about 2% a year rate. You can see here, let me check that, on this MSCI Money link. The share count over the years, it was 21.6 million in 97 and 25.8 million in late 2006, and it is now 26 million shares, so 2% a year dilution. Moving on, the final share count in 2009 will be 27.6 million shares, given this increase, this 2% increase a year. Initial revenue, here I put the last 12 months revenue, which was $349 million, and this is a 200 million market cap, so the price to sales ratio is low. Let me check that. Okay, here we have the revenues for the past 4 quarters. There were 94 million in Q1 2007, and before that 86 million, 87 million, and 82 million. If you add these 4 quarters, you get these $349 million in revenues for the past 12 months, which is my initial revenue. I expect revenues to grow 15% a year going forward. They've been growing about that rate. Let me put here the annual. Okay, you can see there's growth here. Look, there were 181 million in revenues in 2002, 206 million in 03, 257 million in 04, 296 million in 05, and 324 million in 06. For fiscal 2007, let me see what analysts are expecting. Just a second. Where is this? Okay, analyst estimates. Well, they're expecting $367 million in revenues and 392 million for 08. So growth is expected to continue. It was 18% in Q1 2007 when compared to Q1 2006. So I've considered 15% revenue growth going forward, and this gives me a final revenue, which is 2009 revenue of $531 million. And initial net profit margin 5.8%, which was the one we got in Q1 2007. I expect this to expand to about 7% over the medium term, and this gives me a final net income estimate of $37.2 million and an earnings per share estimate of $1.35. This earnings per share multiple estimate of 20.46 I get from the industry average, which is, let's put here on competitors, which is, where is this? Yes, P for the synthetics industry The average PE is 20.46, so I've used this in my valuation model, 20 points. And given this, the final estimated share price is 27.55. And this means a share price compound annual growth rate for the next 3 years of 49.8% and an optimal selling price of 17.65 today. This would be today. That's where the point where the stock would start returning less than 16% a year. So I consider this stock very attractive. On a 1 to 10 scale, I give it an 8, almost 9. Thanks. Bye.